We're live, but I think I'm going to get started. Okay, it looks like we're live. Welcome on board, and welcome to the 1st of July edition of All Access. And once again, I discuss what's been on my mind in the last week, and there's been quite a lot that's been on my mind, quite a lot of big topics, as well as a whole bunch of exciting new discoveries, exciting new discussions. So I'll try to share some of it with you, and I'll try to do it before the sun goes away. I'm at a location without much light, and I'm hoping that we'll be able to have a good conversation nonetheless before I fully lose all daylight tonight. So let's get going. What's been on my mind? Well, number one thing that's really, really huge is this growing statistic. So at any one time, as somebody who built something, you want to see, is that thing useful? Is it still providing a function to people? Are there people coming in to use this thing? And you might think, reading the news, reading crypto news, reading crypto Twitter, that perhaps interest in blockchains has waned, that people have lost a lot of money and have disappeared. And to an extent, that's true. Some people with huge pockets have lost huge sums. That's definitely true. A lot of people have lost money. That's also true. But I do think that there's a core group of people who understand the value that blockchains bring, and they are eager to use blockchain solutions. Case in point, this statistic caught me by surprise, completely unexpected, and based on absolutely no incentive structure that would have given rise to it other than organic growth. Someone did the count and discovered that in the month of June, which in my mind was a slow month. It was a regular month for us. It was a building month. It's like it's time to, we were thinking, let's give time to the space to absorb the losses, to deal with the aftermath of the crashes that we had on, and I'll get to those crashes and discuss them a little bit. But give everybody some time to do their thing while we build. It was a slow month for us. During that month, we added 345,000 new unique addresses. That's, I think, huge. And even bigger is the fact that we reached the milestone of more than 3 million unique users. Okay, so unique addresses. And the way addresses use these things, yeah, probably behind, it's not exactly one-to-one. I use a few myself. I think I'm a power user and I use just a few. So I think most people just have one address. And so if you think about that, that's a huge number. We reached a very, very, very big milestone. And I'm really glad to see that so many people have at least checked out Avalanche. And there is much more to see for them as we move forward. So I think this is great. Just for transparency, here's what the curve looks like. It looks like a very slow start, as you would expect. And I remember those early days when we just were clamoring for growth. And you're sitting there and you're trying to tell the world, hey, we built something, and it's unlike the things that you are used to. It's not the usual Drek. And it took them a while to figure that out. The team around it, the community around it is also not the usual Drek. I'm not going to sit here and sell you on remittances to Ethiopia, and I'm not going to try to sell you on whatever it is that people do, talk to you about decentralization and how it's awesome, etc., which I will, of course, but I will not, it's not the only value proposition. The value proposition here is there's a system built by people who know what they're doing. And they're building this system not to be countercultural, not to obey some kind of dogma, but to actually build something that integrates with the world at large as we have it today and makes it better. That in itself is the value proposition behind Avalanche. That is what makes it so different from everybody else. And it's a little hard to get across. And it gets lost because, at the end of the day, people go to Binance and they see a bunch of coins side by side and they all look the same. And they don't understand either the technological differences or the philosophical differences. They think everybody's trying to be Bitcoin. Far from it. We're not trying to be Bitcoin. Bitcoin is Bitcoin. Bitcoin's got its own incredible, amazing features, like its liquidity, and it's got its amazing flaws, like the consensus protocol that it uses that consumes so much electricity, and it is what it is. So we're not trying to compete with Bitcoin to try to be a store of value, a coin that you hold and don't use. This is a coin that people have to use. It's a coin that well, don't have to, but there are a bunch of people out there who have to use Avalanche to get at the services built on top of Avalanche. We're not trying to be Ethereum. We have a very different roadmap. We differed from Ethereum in how to evolve the system and how to achieve scale, a topic that I will come back to. In fact, a topic that I come back to almost every week because it's very, very big and very important and one of the differentiating features between these systems. There are a lot of people out there who are trying to, or essentially they think that these systems are just replaceable with each other, where they're not. They think that what the feature that Avalanche offers is comparable directly to Ethereum. It is, but it is not. Avalanche subsumes everything Ethereum offers. Ethereum is a single chain. Avalanche is many chains. It's a multi-chain future, all under the same umbrella that interoperates. That is totally different. The vision for Ethereum is a set of L2s that are not interoperable. They settle on the same chain underneath, but the way you interact with one L2 is entirely different from another one. I talked about this before. They're trying to reinvent, I believe, the world as we have it with intermediaries where you're beholden to a gatekeeper, and that gatekeeper is called the L2 operator. That's the sort of future that they're going towards. These L2 operators are so small in numbers, so not decentralized, that they then have to worry about a whole lot of security technologies that are really crucial for that vision to succeed. And some of these technologies may or may not be feasible. A lot of the ones they tried in the past were not. VDFs, where are they now? VRFs, where are they now? Accumulators, where are they now? Some of these are openly known as complete dead ends that failed. But there's a whole bunch of others also on that chopping block to come. And we'll see how these pan out. Anyway, these are all topics that I'm going to come back to. But the nice thing that we are seeing here is this growth for the chain that we built and the chain that people are still coming to use. So there is a curve. The curve is slowing down in its growth. And that's maybe healthy. That's part of the bear market. That's part of the consolidation in the space. That's part of the cleanup. And I think that's going to be very, very good for the space when it's done and out. So once you clear the toxins out of the system, then you can grow again. So I like bear markets. I mentioned this many times before. I love building in a bear market. And I love the fact that bear markets bring clarity and they clean out the bad actors from the space, and that's good to see. So this is what we're seeing. There's a bit of a slowdown, but the curve is still pretty strong. And if we stay on this trajectory, we're going to be in tandem with the growth of the early days of the internet. So, and you might remember how that was. It was also punctuated with big, large steps. Like the introduction of AOL completely transformed the way we deal with things. And then the demise of AOL then caused an explosion, caused a lot of growth. Introduction of new tools like search engines, like Google's introduction, I remember very, very well. I remember AltaVista before then. When they came on board, the usage of the internet, the pleasure one got out of using the internet changed so much that it helped on board the next generation of people and created the next generation, the next wave of growth. That's exactly what we're going to see here. There will be a lot of naysayers. Money is political. There are a lot of people who are wedded to the old system. And there's a lot of conservatism that masquerades as protection of this, that, and the other. But deep down, it's protection of the status quo. They like the way things are right now. They don't want anybody rocking the boat. You should go to a big company. You should be part of the surveillance engine. What's wrong with Google? Go get some stock options. Go invest in some Facebook stock. That's what they want. And they don't understand the fact that these coins are incredibly different in how they work from any other equity and from anything else on earth. They're just a unique asset onto themselves. So in any case, I think these are all kind of common themes on here. We're seeing this growth. I think the vast majority of the people out there, they see it, they get it, and this growth is unstoppable. The technology itself is unstoppable. So if I do nothing at all and I face a curve like this, then I think I'm pretty okay. Like life's going to be good because after all, we're building something, it's getting traction, and there's going to be growth on it that is organic. And once again, we did absolutely nothing, as we always do. I never present numbers where I have done something behind the scenes to juice them. That is just not in the scientific spirit. If I did that, I would easily fool myself. So Richard Feynman has a very famous quote on this about science. And then it says, the goal of science is to make sure you're not fooling anyone. And the easiest person to fool is yourself. So you can start believing in your own bullshit. You can start thinking that there is something there when there isn't. So this is just growth that happened organically in a down month. and I cannot wait to see what will happen when the air is clear and we go back into a bull cycle again. So that's what we're going to position for. It's going to be glorious when those days come. What else has been on my mind? I've been thinking a lot about information asymmetry. And, here's a Picasso. And the famous quote, "Okay, I like it, Picasso." And, if you look from the left, it looks like a normal face. If you look from the right, it looks like a blue face. And it all depends on your perspective. And it's a lot of what I deal with, a lot of what we deal with in the space of financial regulation is all about information asymmetry. Some people know things and then therefore they take advantage. They can take advantage of others, and all the regulations are there to create an even playing field for information to flow. And other times there is information out there that is known to a certain set of people, that it's ingrained, that is well known actually. You can't really be around crypto circles without figuring certain things out about projects, about who's behind them, what drives them, what motivates them, what do they do? Do they really sit at a computer all day, and work and talk to each other until their voice is hoarse? Or are they jetting around from conference to conference, making appearances, shitposting on Twitter without actually getting any work done? It's so clear and easy if you are in these circles to see who's doing what. Are they just stringing you along for years and years and years with promises of fancy keywords, fancy new things that are made up that don't actually materialize, or papers and peer review to come? That's the peer review to commentary always gets me. I am the peer. So if anybody has a paper waiting for peer review, I'm one of the peers that reviews these papers. And my colleagues at Cornell or my colleagues elsewhere from IC3, they are the other peers. So if you want me to whip them, I will. But I'm kind of swamped with reviews right now. So, so don't expect too much. And it's kind of odd for my competing chains to be bottlenecked on my peer review for their progress. So in any case, there are things that people know, and there are things we all know that we don't voice in public, which I'm not going to voice in public today either, because it's just kind of gauche and people get upset at you for pointing out the obvious. And so, but there are these measures in network theory on how fast information percolates in a large network. Sometimes it just sits there. Nobody gossips, nobody talks, none of the nodes say anything to each other, so to speak. And it just, the people who know, and then the other people are just kind of small fish in a big pond, and they never figure things out. And in some other networks and some other societal settings, information flows super fast, and what people know in one area just immediately percolates throughout. So I'm sitting here and I know certain things about the way things are going to work out, the way that development is done in various different projects. And so it's going to be interesting to see how long it will take the world to figure out the exact same things. I know how hard my people work, and I know what's going on with other chains. I know the path ahead of us, and I know the lack of clarity ahead of other chains. So it's really interesting for the world. I wonder how long. Maybe they will never figure it out. Although every time I underestimated the public, I was so wrong. It's far smarter than you think they are. They do figure things out. They do realize that, yes, okay, so there is actually a difference in this giant list provided to me by Binance, that some of these coins are unlike the others. Solana, single chain. Ethereum, single chain. Avalanche, not a single chain. So, this coin, it's just got nothing but a roadmap. This other coin, it's delivering. Like, these are the kinds of things that I know. These people, they're conference prima donnas. They show up from conference to conference to conference. They make a lot of noise. They have a following because they offer some kind of commentary and some discussion points to the people on crypto Twitter. But are they doing the work that they're opining on? No. Or do they have any qualification? There are a lot of people with who know nothing about that on which they're opining on. So that was a terrible sentence, but you got my point. I haven't slept at all last night, by the way. I took a very long plane flight. And speaking of information asymmetry, there was one person, for example, 2 years ago, who was saying all sorts of things about me. And one of them was, he cannot travel internationally. He's a member of a terrorist organization. and he gets people. Like he goes and presents a different face, and I'm whatever it is, like I'm on the left and he's on the right or whatever. And some people just freak out and causes problems. So this is a case of information asymmetry and bad information percolating really fast. And if you've got somebody out there doing nothing but constantly pushing bad info, they actually have a slight edge compared to the person who's actually working, who's not spending 724 on information dissemination. So it's a very funny world out there. I've been giving this a lot of thought. I don't know what to do about it. I think we need better platforms for sure, but more than platforms is a social thing. I think we need better I don't know what, hygiene maybe. We need better processes for vetting projects. I know everybody apes, but I also know that you all feel guilty about it. In a bull market, you should ape. Okay, why? Because things just go up with momentum anyway, and aping is probably not a terrible strategy. Don't be aping into like crap little coins. Don't fall victim to the unit fallacy. Oh, it looks really cheap because it costs only 0.0000002 cents. Well, yeah, okay, well, they printed like trillions of that shit, so overall it's worth far more than it should be worth. And what the heck is going on here? Ooh, all right, I'm being fumigated. So gas attack. There's a literal fumigation going on the streets over here where I am. In any case, so don't fall victim to those things. But in a bull market, it might actually make sense to ape around, and it just doesn't make sense to do that in a bear market. You really do need to be careful. This is the time to actually catch up on your information debt, to really cross that aisle, to really cross that gap, to really question, what is it that I've bought into? Did I buy into this for the right reasons? Did I buy into a bad framework for evaluating projects, ideas, systems, investment opportunities, what have you, dApps, that was given to me by someone else, and I just took it without questioning it? This is the time. You don't have all that much time. You have like some months over the summer, I think. And this is a good time to catch up on things. So speaking about information and misinformation, I saw this yesterday. I was flabbergasted. This is, I believe, a person who works for Solana PR. And, I try not to say anything bad about well, I call out whatever I need to call out. And I do certainly try not to say anything bad about Solana. It was issued earlier than us, but it's similar crop. It's a proof of stake system. It's got a team behind it that's working hard. So that's all great. And it's nice to have compatriots on the path that you've launched on. So I normally never call them out. But last week I had to call them out because they were doing something crazy. They were taking people's coins in a dApp. And I told you what I thought last year, right? I talked to you about the laser eyes that social scientists have. And I told you I don't have strong laser eyes, but I can look into this situation and I see a community that has come together because of the centralization around the system. They love that. And therefore, they keep thinking that way, and they keep applying the exact same terrible centralized thinking, which is a very short, slippery slope. And at the end of that slope, you're usurping somebody else's coins and you're trying to liquidate them. That's what was happening last week. And this week, the counterpart to crazy behavior like that is misinformation. Solana has had 3 outages in total throughout the last 2 years. I'm sorry, that's bullshit. Absolute bullshit. Those of you who know me, I don't know. I think I have more than 30,000 tweets. I try not to use profanity, but this is complete bullshit. And it's completely flies completely in the face of things that I observed. This thing stops every 2 to 3 weeks. That's the average I observed. I don't even use this thing. How do I know this? Every time it stops, I actually feel a bit of pain in my heart for Natalie, who happens to be a friend. And I feel bad because I know how I felt when we had an issue with one of our chains. And we had one issue in our whole entire lifetime. I don't want to jinx it, knock on wood. But that was something that made me feel terrible. And every time something bad happens to Solana, I feel bad. And now this guy's denying my own very experience. This is gaslighting at its best. It's just like, I'm going to tell you something, you're going to believe it, and they're going to repeat it with their army. This is not okay. the mentality that gives rise to this is the same mentality that will take someone else's coins when they find an opportunity to do so, and they will find a way to take your coins as well. It's the same damn thing. It's the thing that brought us here. It's to escape from this kind of thinking that we all went into build a new universe with a better technological foundation. So shame on you guys. You got to police yourselves. I can't do your policing for you. It's too much negative energy. I want to move on to positive stuff, and I've got plenty of that. But guys, you can't be doing this. And if you're listening to this, I know a lot of Vox people actually like Solana because we generally like Solana. But you got to go put pressure on these guys. They can't just run amok like this. This is craziness. It's just like it flies in the face of stuff we saw. Truthiness. Remember this? It reminded me of this guy who I happen to love. It's the belief in what you feel to be true rather than what the facts will support. So that is what it is. And Stephen Colbert is fantastic, of course. And his successor, John Oliver, he also is fantastic. I helped John Oliver's team write that episode that they did on crypto, the one that gave us the terms, like the hashtag rect, hashtag Lambo, hashtag this and that. I taught them what those were, spent many hours on the phone with them. They did an amazing amount of fact checking, by the way, more so than the New York Times does fact checking. And they even ask questions about, is it on the blockchain or in the blockchain, exactly which preposition to use and so forth. Fantastic team. They, of course, Stephen Colbert, his progenitor, provided us the terms that we need to deal with what's happening in blockchains today. A lot of truthiness. So if I think about, I'm going to start having to say this, and this is, I think, true. A lot of what certain chains do is just goosing the numbers. They lie to you with numbers. They fluff up the transaction count. They now are saying, well, we all those failures that we had weren't actually failures, and you're going to see more and more of this. And there are other chains, of course, that do similar stuff. This is not okay. It's just absolutely not okay. Do you want to invite regulation? This is how you invite regulation. So don't be doing that. All right. This other thing that I ended up thinking about was this fantastic write-up by Arthur Hayes. Arthur, of course, is previously of BitMEX, co-founder of BitMEX. BitMEX is now dead after some malfeasance there. But he has incredible insights into markets. And he wrote up how the 3AC failure happened and how the initial failures at Terra Luna and Steth then cascaded into what happened afterwards. There are a couple of things that come out of reading this. One, the pain that we're living through right now, the pain that we're living through with the market crash, had its roots in a bunch of things. And one, Terra Luna, which obviously was an unsustainable system, and but the unsustainability was hidden behind many layers of complexity. Two was Steth. Steth was supposed to be liquid by now. I was told point blank that ETH2 was coming many years ago, and lots of people ended up staking their ETH for that very reason. Now, if you make financial decisions based on a project doing XYZ and the project fails to do it, then you are directly impacted by that inability to deliver. So where we are now is in many ways a result of a whole bunch of things, a liquidity crisis, where people had money and funds, but they were tied up in illiquid assets. And those assets don't become liquid until the merge and until the hard fork thereafter. There are two steps. The merge alone will not cut it. Merge alone will not necessarily give us the speed up that Ethereum wants to have. It's definitely not going to move Ethereum to the fastest possible consensus layer, nor our best architecture. But also, it's not going to unlock those things. So there's a lot of tied up funds, and it's really problematic that this outcome resulted from it. But the other thing that Arthur writes about is what happened with the lending platforms. And he bifurcates the lending platforms into two: the centralized ones, the ones that we're used to, the ones that run the world's financial system today, and then the decentralized ones. And the funny thing is, the ones that run the world today, the centralized ones, they run on trust. You show up and you say, hey, I have a great track record, this, that, and the other. And the human element is involved. And when the human element is involved, it easily finds itself making terrible decisions that are gameable, that are maybe not even gamed, but just through whatever circumstances end up being terrible financial decisions. Whereas when you have the decentralized counterparts, it's a very different world. It's perhaps not as capital efficient, but it certainly is capable of maintaining itself without a government bailout. All right, the one round of fumigation was not enough, so we're having a second round over here. All right, so it's a great write-up about exactly what happened behind the scenes at centralized lenders and decentralized lenders. Now, the nice thing about decentralized lenders is that it was incredibly transparent. I don't know if you guys remember, but I remember what happened after the 08 financial disaster. Just to make it very quick, I'll tell you my perspective. The world went to shit. That was when I don't get that much sleep, then the profanity's coming. The world went just down. Everything just crashed. So at Cornell, we ended up not having any raises for some number of years. We couldn't hire effectively. Quite a few units had to lay people off. In computer science, we didn't have to, but it was pretty rough. No one on Wall Street went to jail. And I remember one day I was sitting in the coffee room with a bunch of my colleagues. We were having coffee after lunch, talking about whatever it is that geeky people talk about, some whatever latest breakthroughs in computer science. And then these three big burly guys came in, and we're like, "What's going on?" And they had wrenches in their hands, and they started undoing the coffee machine from the wall. And we were like, "What's happening?" And they're like, "Well, we can no longer afford the coffee machine." So they took the coffee machine. And the coffee machine ended up becoming a casualty of the financial crisis. The whole time we're raising an eyebrow thinking, how did the coffee machine, why is it that nobody on Wall Street is going to jail, and yet the coffee machine is clearly going to jail? That's weird. And it was just kind of odd. So that's what happened there. And the other thing that followed that whole episode was this need to do stress tests of the financial system. So you have all these lenders, and they create some kind of a grift. They're all interconnected, and so when one player goes down, that's too big. That failure then cascades and takes the whole system down with it, and it coined us the famous phrase "too big to fail." And ever since then, there were actually research projects in computer science to try to test the soundness of a system without revealing all the information that people want to keep private or have to keep private for business reasons. And it turns out it's essentially an intractable problem. There are things you can try to do, but it's too freaking hard. It's just too hard. And it's employed to some extent, but is it effective? I bet you not. Will it remain effective? I will definitely bet you a lot more money that it will not be effective, because the human element is involved. They will find a way to goose the same mentality that gooses these numbers, the same mentality that plays around with data, with facts, it creates truthiness. Will find a way to game the soundness tests while doing whatever it is that they do behind the scenes. But the bottom line is centralized finance completely and utterly failed. And that's the aftermath we're dealing with right now. Decentralized finance was transparent all along, and it worked exactly as intended. And so that is the big lesson, and I think Arthur puts it really well. When you remove trust from the equation and rely purely on transparent lending standards executed by impartial computer code, you get a better outcome. That is the lesson to be learned from the crypto crash of this year. I hope everybody takes that home. It's so clear to me. I hope the bankers who watch it, I hope it's clear to them as well that the future is on blockchains. I've seen the code, as I mentioned many times before. I've seen the code that runs these systems, and certainly many of you know the people who run these systems and know how fallible they are, how human they are. And as long as the trust thing is in the equation, then there will be bad decisions made with consequences that we all have to bear. And when it's the financial system that's many times bigger than crypto right now, then you get into TBTF, too big to fail territory, taxpayer bailouts and all sorts of things, and it was just carnage. And shortly after the coffee machine episode, by the way, we learned that that no one at Cornell was getting any kind of a raise that year, but the folks on Wall Street were getting their bonuses paid that year. That pain has not gone away. I don't think it's going to go away. So we're looking at another 30, 40, 50 years until that generation of people die out. That institutional memory will be there. And I hope you guys enjoyed those bonuses, guys. It's just, and I say guys because mostly guys. I really hope you enjoyed those, because there's going to be something to pay for that, and that payment will come by getting replaced by code. All right, one last big topic on my mind. I was talking to Kevin, and I think this came out of that discussion. The scaling wars. If anybody thinks that we are done with the scaling wars, then you're deluded. Scaling wars have just started. The big opening salvo here was, I would say maybe it was EOS, and it started every copycat, right? It started proof of stake, more or less. I'm not going to count Ripple. It's too centralized to really count. EOS was also very centralized, but it had the core of a platform that took in 21 people into account when making a decision, and then from EOS we begat a whole lot of other systems that all work by accruing signatures. So then these days what they do is they have many more validators, and but when it comes to any single decision, only a subset of those validators are involved. This is strictly less secure than having all of them, and it is what it is. It's fine. It's what it is. So that's how it started. But the big step up here, the step that goes from 0 to 1, was the introduction of the Avalanche protocol. The Avalanche protocol is different. It actually allows millions of participants in every decision. It's truly decentralized. And so the old ideas are gone. Sharding, you never hear of sharding. Remember how it was going to save the day? Where's sharding now? I don't see sharding. So it's in the same bin as VDFs, VRFs, RSAs, the verifiable delay functions, verifiable random functions with accumulators, etc., etc. And generic off-the-shelf POS systems. I don't think generic off-the-shelf POS systems are really out. They're kind of out. They haven't really been flushed out. I think, Tron's still around, very generic. ETH2's new system is very similar to EOS, actually, and people give me crap about this every time. Go look at how it operates. It collects, it accrues signatures, signature accrual system, very similar to EOS. Larger numbers, which is nice. But the way it operates is exactly the same. The messaging, etc., is very same. It's very much the same. But new stuff is in. So what's the new stuff? Well, subnets. Subnets are cool. ZK rollups, optimistic rollups. These are neat. Time will tell if any of them are going to be actually feasible. So again, this is an information symmetry thing. Everybody in my circles knows that none of the existing rollups whose names people know are actually decentralized. You're just saying, instead of going and trading at NASDAQ, I will trade with Charles Schwab. Or I will go to Robinhood and give them my order flow. You have an operator. You have another person in between you and that which you want to settle on. And so that person will take you to the cleaners, or can take you to the cleaners. And they're, depending on what it is that they're doing underneath. And so the existing ones are all centralized. Can they be decentralized? Maybe. Can they be made fraud-proof? Maybe. But the feasibility proofs aren't there. I don't know that it will be possible to put these proofs on a chain within the gas limits that are realistic. We don't know where the trade-offs are going to be. So before people get in my mentions and say, "Oh, he's saying this, that, and the other," well, there's a simple way to prove this. Just go do the feasibility study. You have not done it. If you're going to just go and echo something you heard somebody else say on crypto Twitter, save me the time, save yourself the time. I've read those things. I'm unconvinced. So, we're scientists here. Show it to me. And if you do show it to me, then I will flip. I'll say, oh, yeah, that's good. And let me pre-flip on one thing. Zero knowledge rollups are actually pretty nice. They do have the capacity. I haven't done the math. I haven't done the feasibility study. my gut tells me that they can probably be made to work. They can probably be feasible. But the other ones, I don't know, and you don't know. So before you hit your horse onto that, let me just remind you that the math is no, the science is not quite there. New VMs. It's time to build new VMs. We support a few on Avalanche. We can support many more, and the world needs more VMs. I think it's certainly not the case that a single VM is the end all in this game. And whoever does a good job here can gain an upper hand and advantage. New databases. We've been working on this. This is going to be a lot of fun when it comes out. So we're all going to be fighting this out very, very hard. Part of the reason why my voice is gone, yeah, okay, sure, I didn't sleep much last night because I was flying. But really, it's because I've been talking to a lot of people recently, and this is an actively contested area. We're all actively working, and the top people in this space, with whom quite a few of whom I have the pleasure to work with, and with a few of whom I'm friends with, and they're working on other projects. They're working really, really hard. I can't wait to see what will come out of this. I'm definitely not saying Avalanche is the end all. It is a first step. It's a huge first step that changed the field, and there will be much more to come. And I think you saw us bring in a new bridge technology to the space, in addition to a new consensus protocol. And you recently saw us bring in a new wallet. That wallet is going to turn into something much more than a wallet, so that the user experience for a new user is not miserable. It's essentially miserable for people. DeFi has been inaccessible, partly because fees were very high prior to Avalanche, and also because the user experience was absolutely horrendous, and that's something that we felt we needed to address. So we're going to be addressing everywhere where we see bottlenecks. We will bring the best of technology to every issue that we identify as limiting the growth of this space. I have a long track record of doing this. You guys, again, information asymmetry is a funny thing. I can point to 3 things. There's many more in the pipeline, and I cannot wait to unveil them all. So let's talk about this Bitcoin bridge and core. This is, I don't know what the numbers are. We've got $17 million bridged in core so far. I think this is after 5 days of core being out. Actually, the snapshot was earlier this week. So here are a couple of things you can do. You can take your Bitcoin, and without going through a custodian, without going through a centralized entity, move it over, create a shadow asset on Avalanche that corresponds to your Bitcoin on the Bitcoin network. We call that BTC.B. And you can then use your BTC.B in DeFi. And so a couple of you have figured this out. I think it's on the order of about, I forget how many. I think it's on the order of about, maybe it's here. Some number of thousands of people are active users of the core wallet right now. Some hundreds of transactions take place every day, I believe, on the bridge. So that's great. These are the very early users. They're rewarded for taking the risk and being early users. I think the yields are pretty nice on BTC.B. So take a look. And already at $17 million, we are about 1/4 the size of the Liquid network from Blockstream and 1/5 the size of the Lightning network. So Lightning network, being the scalability solution that was bandied on for years and years and years by the Bitcoin Core folks. And it's fine. I mean, a lot of us who are scientists said, what you're saying is not really scientifically held up. There'll be capacity issues, there'll be these kinds of issues, those kinds of issues, etc. But the sum total amount of money in Lightning, for example, is about $85 million or so. So that's approximately 1/5. So 17 million is about 5x bigger than what's in the bridge right now in Avalanche. So Avalanche is a fantastic way to take your BTC that you're holding and put it to use, lend it to other people, or use it to provide liquidity to people. You allow people to do swaps between WBTC and BTC.B if you like. So whatever use you might want to put it into, you end up taking some risks in the sense that your coins are no longer in the hands of whichever exchange you're storing them on, or they're no longer in your ledger. You could do that. You could just have them be inert and you never get any growth. or you could put them into finance, into decentralized finance, and then you will earn yield on it because those coins are actively being used by others. And these contracts have been in use for a long time now. Aave, for example, the lending platform that one would use to lend any asset, is very well vetted, and it's not. I can't vouch for its correctness, but I use it, and many others have used it, and it's been audited, etc., etc. So this is where we are. So this is Udi pointing out the same thing. Udi, of course, being a Bitcoin maxi, his words are very different. Or you used to be a Bitcoin maxi, a reformed Bitcoin maxi, someone who understands Bitcoin incredibly well, someone who understands Ethereum very, very well, and he understands Avalanche as well. So it's already onboarded 25% of the Bitcoin value on Blockstream's Liquid sidechain. So that Liquid has been live for 4 years. It's it is doing whatever it's doing, and here we are doing the same thing in less than a week. So, and then there's a nice dashboard on Avalanche that someone built. So people are bringing their Bitcoin. Some people are checking out how easy it is to move it back, and you will find that it takes about I think it takes 6 confirmations to bring it in, and it's immediate to bring it out. So you wait for 6. The bridge has to wait for 6 confirmations, then gives you your BTC.B on Avalanche. You get it in about a second. You can then move your BTC.B in a second. It is the fastest way to move Bitcoin around. So you can do that all day long, and then at the end of the day, if you want to take your BTC back, then you can go in the opposite direction across the bridge. Again, it takes a second to go into the bridge. Your Bitcoin transaction is issued, and whenever you accept that transaction, the coins are yours. You could then build on it. You should probably wait a little bit before it finds its way into onto the chain. So you need to check for confirmations on Bitcoin as usual. But the delays are always incurred on the Bitcoin side. So this is really cool. Go check out this dashboard. What I learned from that dashboard is the fact that 2/3 of the Bitcoin that's coming onto Avalanche is going into some kind of DeFi, and 1/3 is probably staying there. Probably people are kind of figuring out what to do, which DeFi tools to use, etc. So, and then we've got this thing, the video that cannot be loaded, but it shows how to add the core wallet to Google Chrome so that you can partake in all of this. It's super easy. So you go to the Google Chrome store, you look for the core app, find core, install, then click on it, and it acts very much like MetaMask would act like, except the user experience doesn't suck. It's actually not a terrible user experience. And you will find that it's fun to use, easy to use. You can see your NFTs, you can see your NFT collections, it works really well with ledgers, etc., etc. So let me see. Right before my voice gives out, there's a couple of other developments happening on Avalanche. Centrifuge Connectors is coming. This is a hybrid cross-chain solution. They're bringing real-world assets from Centrifuge directly to Avalanche. They're launching on us. So they've got 3 partners. We are the primary chain that they're launching on. So this is a way by which you can put invoices, real estate, royalties on the Avalanche blockchain. And once you have these in digital form, then you can start to do cool stuff. You could borrow against your stream of royalties. Easy. Just Avalanche, Aave, and Centrifuge. You could do all sorts of real estate. It does need to have the legal foundation. That's what Centrifuge is providing for us. You can do real estate transactions, etc. This is really, really cool stuff. There is going to be a lot of derived products coming off of this. I can't wait to see this in action. So that collaboration will be legendary. This is Stani pointing it out. What could you do if you had Aave and Centrifuge? And there are some really exciting things that I'm not going to name here, but I know what I've worked on. I know what my team has worked on, and so I cannot wait. Stani is he saying anything here? I read this tweet earlier, and yeah, so he's not revealing it. Good. Okay, he shouldn't. So good. It's going to be a lot of fun. Just lending in all its forms is the primary function of finance in general, and doing it at the speed of Avalanche, doing it with the convenience of Avalanche, supported by the wallet, etc. It's just going to be a game changer. So, there's one other thing. Let's end on this note, maybe. So there was a curious thing that happened on the way to scaling blockchains. Here, I've been told, yeah, blah blah blah. What do you know about scaling systems? What do you know about distributed systems? Yeah. So it's crypto Twitter. People say all sorts of things. The most vitriolic things come from the people who know the least, of course. But something odd happened where Arbitrum ended up becoming so expensive that it's just more expensive to use Arbitrum than it is to use Ethereum. I am shocked and devastated. I'm not. So I called it. I mean, I kept calling it. So Vitalik once said that he doesn't trust bridges. So every time there's a bridge failure, everyone's like, "Oh, Vitalik foresaw this." No, like obviously there will be bridge failures. Yes, obviously there will be all sorts of failures of bad technology. Many bridges out there are terrible. That's why we built our own bridge using completely different technology. So just as true are the observations that we mentioned, which is, these things are just chains. Block space will always be limited. If the underlying implementation isn't efficient, fees will be high. This is not a debatable issue. It's just the way it is. If the fees are not going high, then the user experience will suffer. Why? Because there will be a lot of load, and the underlying system will have to discard some of the transactions, and it will not know which ones are important, which ones are not, because the fees are the things that tell it which ones are important and which ones are not. And therefore, that will lead to terrible outcomes, like somebody's Bored Ape transaction might be included, and your transaction to interact with a landing platform or to put up collateral might not be included, and then you get liquidated and lose huge sums of money. So this is just fact. I try to, whenever I touch this topic, because there are so many know-it-alls out there, I try to say things that are as uncontroversial as possible. It's just facts. So block space will always be limited. These things are all chains. Some chains, they checkpoint their state onto the underlying chain. Whoopty. Okay, good. That's nice. But is it a good chain to use? Is it decentralized? Are you at the mercy of some idiot? Is that idiot going to decide one day that they will take your coins and liquidate you? Is that something they can do? Is that idiot going to decide, hey, I'm going to hold your transactions from being included unless you pay me? I mean, these are things that all could potentially happen with various different technologies that are trying to be built. But if you do have a centralized solution, you have to worry about all of those potential failures. So these things are just chains, and so you got to really ask the question: is this chain I'm using a trustworthy one? And is the user experience good? And is this a future I want to be in? So here I am, and we're looking at this, kind of called it, and we'll see more of these kinds of things. And I worry, of course, about a universe where there's a whole bunch of these things, and every one of them offers a different API, different RPC interface, etc. And if you followed what happened with DYDX, they ended up taking a stab at the whole L2 vision far harder than anyone ever has. And so they just kind of devastated that whole vision. So I'm not going to say anything else about the L2 vision except point out this is happening. We said it would happen. We always had the right framework when it comes to these chains. Yeah, you can add bells and whistles. Those bells and whistles come at a great cost. So you have to checkpoint state onto the lower chain. Well, then you got to pay. You're going to have a complicated bridge technology that involves proofs and this and that. Well, that requires space on the chain. You got to pay. So, and you got to wait in some cases. So the user experience is impacted. There are huge trade-offs with just about every technology, obviously. And this particular one, is an unproven one. And we were in the early days. We're already seeing things that we should not be seeing. Arbitrum ended up undoing a change that they made. And so this is where we are. It's an interesting situation. I think the one enduring thought that I want to leave you with is that of the Avalanche approach to this. We believe in having many chains, supporting them with the same uniform, elegant API, and allowing them to send assets between each other, and to provide the ability to everyone in the world to create their own compliant assets, digital assets that they could trade freely around the world. So that has been our vision from day one. It's very different from everyone else's vision. And going back to that information asymmetry point, it's let's watch how long it takes the world to figure out that, hey, these guys know what they're talking about, B have the right mental model, and C have the right set of goals. So okay, I guess I have one last ranty thing here. Oh yeah, I was going crazy about this. I happen to love TikTok. I watch it. I consume TikTok religiously. I hate it and I love it. It's just stupid. And the whole time you're consuming it, you're thinking, oh, of course, this is a Chinese company. It's collecting my information. But then again, American companies are doing the same thing. And until recently, they were sharing, the telcos were sharing our information with the government without a warrant. And they got immunity, post-facto immunity for it. And so it's a funny world. So all of these centralized services, like their brethren in finance, they all resort to malfeasance. They all resort to cutting corners. They all resort to something funny behind the scenes because they can, because humans are involved. The only sensible path forward is Web3, where the users are in control. And I cannot wait to make that happen on a subnet near you. On that note, I'm going to wrap up today. Thank you very much for bearing with me. I'm more tired than usual, and my voice is even more cracked than usual. But I think we stand poised again at the dawn of a new age. These assets are now here. I was just in DC. I think I mentioned it last week. About 10 days ago, I was in DC, spoke to a great number of people there, and they all get it. They really do. And they understand that this is a new asset class. And their reaction to it changes. Some people want to just kind of try to rule it out, but some people, many people, understand that it's a different class of asset, and they're beginning to understand that the government needs to handle them appropriately. And so that's great. And we've reached the stage where no government can really interfere with or stop what is about to happen. So that's a fantastic situation to be in. Prices will go up and down. So I don't know where the prices are going to go. If we end up hitting a recession as a country, then it's going to be miserable. No matter what. Crypto will be miserable, of course, but also regular life will be miserable as well. I hope that doesn't happen. I hope that the people guiding the economy have more sense than that. So we'll see what happens. No one knows. But one thing I do know as a technologist, that is, these things have value. They bring something that you cannot find elsewhere. You couldn't be doing these things on any other platform. Let me repeat, if you look back, so I try to do this on occasion in my writing, and I try to do this on the podcast. It doesn't always happen, but at the end, I try to loop back. But if you look at the themes that came up today, they all go back to the same thing. When you eliminate the human element from the equation, when you replace it with algorithms and you provide transparency, that achieves an end result that's far better than what you could have with humans and post-facto monitoring and regulations and this and that. We've had thousands of years to build that system. Doesn't work that well. We've had a few, at most a decade, to build the DeFi system. I would say the last 3 years is when it actually took place. And so in those 3 years, we built something that was more resilient. And as a techie, I can tell you that what we built is more elegant, more clean than what people are using. So on that front, I cannot wait for the rest of the summer, the rest of the building that's going to take place, and very excited about what is to come. I hope that the central bankers out there do not ruin it all by driving the economies into the ground. And I hope that, as I said, I will see you on a subnet near you, and I will see you on chain. Thank you very much for your time.